Good morning. Welcome to Stock Market Today for Thursday, March 4th, 2021. This is your host, Dan Russo, the Chief Market Strategist at Shaken Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Shaken Analytics. Head over to shakenanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. So let's dive right into it. U.S. equities finished lower on Wednesday, fading into the close for a second consecutive day, with growth lagging once again. Tech, consumer discretionary, and comm services lagged the broader tape. Energy, industrials, and financials outperformed on the day. Treasuries were weaker. The dollar strengthened against the yen and the euro. Gold finished down 1%. WTI crude was up 2.6% ahead of today's OPEC meeting. As we get to the desk this morning, futures are under pressure. S&P futures down about 60 basis points. Asian markets were weaker overnight, with Japan, China, and Hong Kong all down over 2%. European equities are weaker as well. Treasuries slightly stronger here this morning. The dollar is stronger again on the major crosses. Gold is off 40 basis points. WTI crude is down 1%. And investor focus will turn today to Chairman Powell's speech midday around 12:05 Eastern time, looking potentially for comments on the current backup in rates in the Treasury market. And that backup in rates has put the Q trend under pressure. Choppy trading continues in the near term. That's in line with kind of what we've been saying this week. Starting with the SPY, support still in that 370 to 380 range. We're kind of testing the top side of that. Then down below at 340. Qs through that 315 to 320 support range is broken now. So closed at 309 yesterday, putting 300 as the new key level to watch here, and quite frankly, putting the trend into, I guess, a wavering position. That uptrend off the March lows is wavering. That's I don't know any other way to say it. Wobbling, wavering, under pressure, or a couple other ways to think about it. IWM support still in the 200 to 210 range, then 160 to 170 below that. Now, I still see scope for 413 on the SPY. But I think that that's going to be contingent on Q's holding 300 at this point. Just kind of watching the trends, watching what's playing out. We are still oversold in the short term based on our indicators across the board, but there's no two ways about it. The Q's and the growth factor are wavering here near term on an absolute basis. Now, growth has been lagging value since September, so the growth value dynamic is nothing new. But the key now is to the extent that this kind of spreads throughout the rest of the market or remains contained. That remains to be seen. It's obviously something that we're going to be watching very, very closely. Let's hit our market in a minute now. What are we writing about in the note today? Well, growth lags again as rates continue to back up. We got a little bit of a reprieve, and then rates moved higher once again yesterday. Chairman Powell is going to speak at the Wall Street Journal Jobs Summit today. As I said, investors will be squarely focused on his commentary, especially as it relates to the recent backup in rates in the Treasury market. He is scheduled to speak around midday Eastern time. Retail stocks are weak with bearish money flow. Breadth metrics weaken slightly. Could be a sign of continued choppy trading ahead, and futures point to a lower open here today. Taking a look at the major indices from our power bar perspective. Remember, the power bar tells us within each of these kind of indice ETFs, right? So the diamonds, the SPY, the Qs, how many stocks are bullish in our model, how many are neutral, how many are bearish or very bearish. So the Dow loses 38 basis points yesterday. It was an outperformer, 7.6 bulls to bears there. S&P down 1.3%, 125 to 55 bulls to bears. NASDAQ, your underperformer on the day in a big way, down 2.9%, and the ratio flips bearish, 19 bulls to 21 bears. Small caps down a little over 1%, 748 to 223 on the bull bear ratio there. Bonds downticked again, so sending yields higher. Energy was up 1.5%, continuing to be one of the standouts at the sector level as the rotation, reflation, reopening, cyclical rotation trade continues to play out. 5-0 bulls to bears in the energy complex. That would be XLE. According to the Chaikin Power Bar, small cap stocks and large cap stocks do remain bullish. Let's take a look at our screen now, sticking with our theme of using Thursdays to run a bearish screen, names to avoid, names to potentially look for bearish ideas if you trade there. Remember, screens are just a starting point. I would never think that it makes sense to just run right out and start shorting stocks just because they passed a screen, or start selling stocks. I think they're a starting point. They're a way for you to sit up and say, what's going on here? How should I think about this? What further analysis can I do? And, if you own any of these names, maybe that gets you to dig in as to why you own them. If you're looking for bearish opportunities, I think it's a great starting point. This week's screen, we're looking for weak fundamentals where relative strength turned bearish this week. So we're starting with the Russell 3000, looking for ratings in our model that are neutral, minus, or worse, where the financials are bearish and our view of expert opinion is bearish. And again, where the relative strength turned weak this week. That returns 20 names to us, where if you own them, again, as I said, you might want to consider, why do I own these? Should I be managing risk? You have to kind of make this your own. But some of the names that jump off the screen at me are Marvell in the semiconductor space. What else kind of jumps off? Space, right? Virgin Galactic, Lending Tree, kind of these high multiple names that are out there. Anaplan can probably fit into that mix as well. So an interesting group of names that probably warrant some extra attention if you own them, and or if you are looking for opportunities to trade to the bearish side of the coin. Let's take a look at our sector tracker now. The movement of the major sectors over the last 5 days of trading. All red, we don't want to see that if you're bullish, but kind of speaks to the choppy trading that we've seen here near term. As always, the focus turns to relative strength. So as markets have turned choppy here, what's holding up better than others? And it's those cyclical areas of the market like financials, industrials, and energy. Comms have been strong of late. I touched on this in my note on Tuesday. Middle of the road, materials, utilities, and healthcare, and then laggards, staples. Tech, right? Tech is under pressure. The growth theme is under pressure. The high multiple stocks are under pressure. That makes sense. Discretionary. Remember what the two largest holdings in the discretionary complex are on a cap weighted basis. Your two largest holdings are under some pressure here near term: Amazon and Tesla. So that speaks to what's going on in the discretionary landscape. And I would also note that retail has come under pressure. Finally, real estate is at the bottom of the list. Now, as we take a look at our industry in focus, remember, this is auto-generated, and I kind of analyze it for you in real time as if you came to me and said, hey, Dan, what do you think of the Capital Market Services Group? Well, over the past 6 months, it's been an outperformer, leading the S&P by nearly 26%. Solid power bar ratio, very strong at 27-2. It's currently ranked number 4 of 21 subsectors, having moved up 1 slot over the past week. So some of the indicative names there: Virtu, VIRT, with a very bullish rating; Cowen, COWN, with a very bullish rating; and Evercore, EVR, with a very bullish rating. All three being holdings of a fund that is very much up and to the right. KCE, the ticker symbol here. Notice the outperformance yesterday. Only down 13 basis points in the face of bigger declines for the broader averages. Very bullish rating, strong trend above our rising long-term trend line. So what do we have here? We have a very bullish fund that is outperforming. Actually, look at the intensity of outperformance has actually been picking up over the past month and a half or so, down near an oversold level with bullish money flow. So lots been made about the financials, and I think with a lot of the focus on the banks. But it's important to remember that the financials are a much more diverse sector than just banks, right? With capital market services, insurance, parts of that sector as well. And I think it's important to point out that other areas outside of banks, whether it be the majors or the regionals, are holding up and doing well as well. So, from an idea generation standpoint, 27 bullish or very bullish names within KCE that potentially warrant some extra attention for investors who are doing their research process. Let's take a look at what's trending now. Yesterday's movers and shakers are gainers and losers. I'm going to say light on the news front as far as company-specific news goes. We are, out of earnings season for the most part. Kind of it's macro time again. right? Highlighted today probably by Fed Chairman Powell's speech. But on the winner side of the board, I really couldn't find anything company specific to drive names like Lumen up 7%, Norwegian, obviously part of the reopening, vaccinations play into that. Holly Frontier, HFC, part of the energy complex that's been strong, as is Diamondback Energy. Both of those stocks up about 5.5%. UNM, I didn't see anything company specific to drive the trading in that name. We get to the loser side of the board. I think what'll jump out is high multiple names. Etsy down 12.5%. Stock had a nice pop following their earnings announcement, and it's giving that back. Market Access actually did have something company specific to point to. They reported their trading volumes, which disappointed investors, their monthly trading volumes. That stock down 12%. Align, right, part of the growth theme, down 6.5%. Enphase is interesting. The clean tech solar group has been under pressure. These stocks did really well leading into the election and subsequent to the election, but have actually underperformed, right? And it's kind of interesting. You would think of with President Biden in the White House, a blue wave on the legislative side in the House and the Senate. That's obviously an ideal situation for clean tech, solar, not the best situation for fossil fuel, i.e. oil energy, but markets are discounting mechanisms. The clean tech theme was strong and it's become almost like a sell the news event. Likewise, energy has gone in the opposite direction, gone higher as the clean tech trade has come off here. So that's just, it's always interesting to see when the market does its job of discounting the future. ServiceNow, part of the high multiple names, down 6% yesterday on the day. Let's dig into the charts now. Breath Metrics weekend. So we can kind of look across time frames as we often do. The longer term time frame, we still have 80% of the S&P 500 above their 200-day moving averages. So, longer term perspective, bigger picture trend still in place, right? I think it kind of lines up with the wavering that we mentioned earlier. The percentage of stocks above their 50-day moving average dips below that key 60 level here down to about 57%. Now, the advanced decline line is backed off the highs that we were talking about last week, but is kind of maintained above a near-term support level. So very much tracking the index. And if we took this down to a shorter time frame, I think what you would see is, the percentage of stocks above their 20-day moving average, that is down to about 51% from 65% last week. So you can see how that plays out short-term, intermediate term, long-term. So that kind of jives within the context of a bigger uptrend. There is some near-term wavering that has caught our attention. And a lot of that wavering is focused on the growth theme. Take a look at the Vanguard S&P 500 growth ETF. It has a neutral rating. Power bar ratio on this fund is even now at 37-37 as the fund has taken out the 50-day moving average and traded down to the support level. Remember, growth has been an underperformer since back here, since that early September timeframe. On an absolute basis, right, it's worked. It just hasn't worked as well as other areas of the market. And now we're pulling back to test that kind of breakout level as momentum has been flagging and as VOOG has broken down on a relative basis against SPY. So that rotation out of the growth names, especially the high multiple growth names, and into the more value cyclical areas of the market continues to play out. And then retail is under pressure as well. Bearish ETF rating for RTH in our model, 4 bears to 1 bull, as we have decisively broken the 50-day moving average, which is actually starting to roll over. 200-day in play with room down to about this 140 level as momentum has flagged. And on a relative basis, I mean, you can't say anything other than this is now a relative downtrend since topping out in the October-November timeframe. So that's going to wrap us up for today. Take us for that test drive. I will be back with you tomorrow. Be well, be safe. Have a great day, everyone.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.